Alrighty, welcome everyone. So good to have you with us this evening. It is Tuesday and we are here for another almost said in person. I'm already like lunging for an in-person event. It's just coming out of me when it shouldn't. So we are going to plan an in-person event soon, but for now we are still on Zoom. And obviously some of you might be watching this recording later on YouTube. Thanks for stopping by and watching the recording. I know we've got international family. So tonight we're live and we've got Dan with us as well. Some of you may have picked up on this, maybe not all of you yet, but you've already actually got another update today. So the main indicator, not our MACD, our main indicator's had another little update, which Dad's going to talk about today, something really cool with our trend table. So he will be covering that for us shortly. And aside from that, guys, we're just really excited. We've got, obviously everyone's got version 3 right now. We are getting super close to having a website up soon. I'm going to be probably releasing all of our fresh branding in the upcoming days, so you'll get to see some new things. So watch out for that. New little icons in our chat, things like that. I might give the big Facebook page a refresh. Might even start a brand new YouTube channel, but we'll keep that on the download for now. But anyways, guys, really looking forward to having an in-person event soon. So we're working on that. We just want to get all these other ducks in a row first. But for now, we're going to lunge into the rest of tonight. So Dad, I'm going to bring you up and let's dive into the training for this evening. Where are you?
Cool.
There you are. Got you.
Yeah, we go.
Cool stuff.
This
All
is
right.
so cool. Good evening and welcome, everyone. Nice to have you with us. It's so cool. I just love what's being built in this community, all the questions, everything that's happening. I mean, it's so good trading. I think when I talked about, the 5 reasons why people fail, one of them is, I believe, because they've got no support, no community, no mentoring, nowhere to ask questions when they get stuck. So we just love the questions. We know some of you are finding it tough. It's like that with trading. But I just want to say thanks so much for the amazing feedback. I mean, one of the little changes tonight has been from feedback. So, I mean, I've said it before, I really feel that this is our indicator. I mean, I happen to be the guy that's doing the coding, but I really see it as being a team effort. It's our trading family, our trading community. And the feedback you've given us is helping us to make TrendForce better and better as we go. So look, we have made a lot of changes in the last few months as we got going, but Ta and I were talking today. We really feel like there's nothing big around the corner. There's something with the MACD. It's not changing the strategy. It's going to make things a bit more helpful. Maybe around our live event, we'll release that. But the main thing really is kind of really starting to get set in concrete. We're learning the rules, we're learning the strategy. But again, we just really, really appreciate the feedback we get. It's really been a great sort of team effort. So thanks so much for the suggestions and the questions. It's helping to make us all sharp. Now remember, trading is tough. I know by some of the comments, some of you guys, we all struggle. But remember, only 1% of people who start trading are profitable in their first year. This is not easy, I don't know. Sometimes we can get very frustrated. There's the rules. We want to break the rules. We want to get trigger happy. But if we apply the rules and we exercise patience and discipline, we will be profitable. And so for me, the big thing is that the dream, for me, I've said this before, I'm not in this for the money. I really have a heart's desire to see people prosper, to develop more streams of income and ultimately to become professional full-time traders. That's the dream, where we only work 1 or 2 hours a day and we learn to be skilled at what we're doing. And remember, I've said this before many times, no one becomes a doctor in 6 months or a year, or an accountant. These things do take time. So I want to encourage you, if you are struggling, persevere. Eventually, things will become plain. As I said, I was saying it to someone the other day, I was catching up with Steve, and we were chatting, and I said, eventually you'll take one look at the chart, you'll be able to read it. In the beginning, starting out, there's a massive lines and candles and things going parallel, sideways, up and down. It's a bit of a spider's web. But I tell you, it all becomes, the more you trade, the more you end up taking one glance and look. I mean, for me now, I can just take one look at a signal and immediately my subconscious says no or yes, this looks good. And so it does take time. But I wanted to say something else as well. Just let's remember the difference between fundamental and technical analysis, because that really is coming to play in trading. We need to have fundamental analysis and technical analysis. Now, fundamental analysis, that's the big picture that affects price action. So what is happening in the economy? What's taking place? What could affect trading today? Is there anything I need to know about? I mean, technical analysis is the easy bit. That's following the rules, following the indicator. But we have to understand the bigger picture of price action. That is fundamental analysis. That's why I keep an eye on the economic calendar. I know Ty's often posted them. That tells us, a whole lot of what's happening. And, sometimes before I used to do that, I'd get up and man, price was going sideways, it was going nowhere. I couldn't believe what was happening. And then I find later in the day that it was like Thanksgiving in the States or some other bank holiday, and I didn't know. So always I start my week by looking at the economic calendar, and I kind of, there's one or two you can look at. Ty's posted them before, and I like to see what is happening, what could affect price action this week. And so I'm looking for bank holidays. I'm looking for big announcements. I mean, this Thursday, for example, it's interest rates. I mean, that is massive. And that always happens in our time. So I think around 6 o'clock, there's an interest rate announcement. And then Powell is probably going to speak after that. And then there's huge moves. I learned I don't take risks around then. I make sure if I'm in a trade, I'm in a break-even position, I'm profitable. I never just enter a trade like, 1 minute to 6 if there's going to be an interest rate announcements. So I want to encourage you, look at the big picture, look at the economic news in the week ahead. I put them in my diary to make a note. Sometimes on my phone will go beep, reminding me. And also, just in terms of fundamental analysis, this has been, I think Tao would agree with me, this has been the most unusual trading experience over the last few months. It really has been, I'd say, quite challenging. It wasn't that long ago when there were 90 pip moves and 60 pip moves. I mean, even there were times last year I would turn my computer on, I'd get 30 pips in 15 minutes and turn it off. But it has been challenging with Trump and the tariffs. This is fundamental analysis. There's a lot of uncertainty about what's happening. A lot of economies are affected. That affects investments, that affects the NAS, that affects the Dow. We can see in times of uncertainty, gold is going up. There have been huge moves in gold. So it's, the big picture. I used to be a surfer. I used to do it competitively. I used to love it. And I just thought of when I was thinking about the economy and trading, there was two kinds of swell. There was what we called ground swell. And that's surfing in Cape Town in South Africa, where there was ground swell. These huge, storms way in the deep South Atlantic would generate these massive waves. They would come in sets of 7. You could choose your wave. You're surfing with buddies. I'll take the first one. You take the 7. Take the second, third, etc. It's quite easy, to surf like that. But then you also got what's called wind chop surf, where like local winds would generate waves. There'd be one or two, hard to work out which one to take. You'd get up, we'd call it would die, and that's what I think trading's been like in the last few months. It has been difficult. It's been more like wind chop. It has been a bit harder. And that's why I actually appreciate TrendForce, because I think TrendForce has saved me and has saved a lot of people a lot of money, because our rules are very good and very tight. But things will change. The market will eventually find its rhythm. So, I mean, if you are doing well in trading now, you are doing exceptionally well, because this, to me, has been the hardest season of trading. It's taken incredible patience, incredible discipline. So the rhythms will come back. Things will get easier. So we're going to jump in tonight and just talk about a few upgrades. So I'm going to click share, and hopefully that will, on the NAS. Let's see, hopefully that is the right chart. So if I click share, there we go. I know you can't see your beautiful faces, but I can see Elise, I can see Amanda, I can see Zeph, and it's so good to see your faces there. So I'm just going to move you off my screen. And so we're going to look firstly at the table tonight, because we've made 2 changes to the table. Now, we did say there would be some changes because we wanted to get this table out as soon as possible. To me, it's a real game changer. And we wanted to get that out as quickly as we could, knowing there would be a few changes, but I know you guys are pretty flexible. And so the first change, and this again, community input. So thanks so much, Marcus. Now, was it Marcus? I don't want to give glory to the wrong person, who said it would be nice if we could toggle some of the time frames on and off. So if you've downloaded the new version, which Ty said is available, if you go down now to our main, the force table, you can see now we have got little boxes. You can uncheck any of the time zones you don't want. So when I was testing this on Saturday morning, let's just look at the table. I think we were all bullish, a lot of green. So the H1 and H4, they were all green. So I ticked off H1 and H4. And so if you do that, you will see it'll take a while. My computer's lagging a bit tonight. See, my computer does crash now and then. So if I disappear, it hasn't been to make a cup of coffee. It means my computer's crashed. There we can see. Actually, let me make the table giant print. I'll make it large so we can all see it clearly. So size is, let's make it large for tonight.
You know what? I
So we
just
can,
found the Zoom chat from our live analysis the other morning, and it was Richard. Richard Reed, it was your suggestion, bro. That
Richard
Richard.
Reed, thank you
Marcus
so
says it
much.
wasn't him in the chat. So I'm like, we're going to find out who this
Thank
legend
you.
was.
Richard. Thanks, Richard. That's why I really, really appreciate, community feedback. That was a great idea. I just, I'm not the be all and end all of design and programming and coding. So I don't think of everything. So I just love it when someone thinks of a great idea that's possible. And so you can see we're now in the giant print size, and I've locked out H1 and H4. So you could also, knock out M5 if you want to make it easier. But I think when we're trading, we want to have, the least amount of information possible so we don't get kind of, frazzled with too much, but also enough to make good trading decisions. And so now you can, if for example, this is looking very bearish now. I mean, there's a lot of green. The zones aren't aligned on the time frames moving higher. But we can see we're very, very bearish. So if the H1 and H4 were also red, there's no point in keeping them there, because they only change. I mean, those lights only change every hour on the 1 hour, but every 4 hours. So this makes it easy to read. There's less information and it's more concise, easier to make a decision. Okay, so that is the one change. So thanks, Richard, for suggesting that. Then the other big change is I've made a change in the programming. So you won't see it now. But in the MACD, now this may take a little while to get your head around this. What I've done now, the MACD before, it only had green, bright green, and bright red in the MACD. And that was basically telling you if the MACD was bullish or bearish from the crossover. But what I found, one of the most helpful things that I've found is our histogram color change. So when that histogram changes color, to me, that's huge confirmation either to enter a trade on a signal or to re-enter a trade that's already running. And so I especially want to see what's happening on the histogram on high time frames. And so what I've done now, so this will take a little while to get head around. I mean, my mind was getting frazzled trying to work out the programming. There's like a line of code that's about that long with all the different possibilities to make sure I got the logic right. But basically what I've done now is I've got 4 colors for the MACD. So if we look here, so I'll spend a bit of time here. You will see, let's go down to our table. We can see here's the MACD. So before you just had a bullish and a bearish color for the crossover. So there was just bright green and bright red. But now I've changed the colors. There's also dark green and dark red. And so when there's a standard bullish crossover, when the MACD crosses the signal line, bullish, it's going to go to dark green circle, and the opposite. When the MACD crosses the signal line, a bearish crossover, it's going to be a dark red circle. But now I've got
Dad, just to clarify that, is that when a circle appears?
When a circle appears.
Yeah, so when the trend zone on the MACD shifts basically from one color to the other. You can even see down the bottom left there as an example.
Yep. But this is so helpful. So it adds a slight level of complication. I said to her, if you don't like this, all you've got to do is just check that color to bright, and the red, that one also just put it bright red, and it'll look exactly like it was, before you downloaded the new version. So what I've added now is this extra color. So we've got MACD strong bullish, MACD strong bearish. And so what I've done is I've now programmed the color of the histogram into the MACD column. So at the moment we can see the MACD on the 1 minute is bright red. That's because the histogram is bright red. The 3 minute histogram is bright red, and so the 3 minute histogram is bright red. On the 8, it just happens to be also bright red. So that circle is bright red. Now, this to me is massive in terms of trading, because very often when there is, say, a 1 minute signal and I'm waiting for 3 minute confirmation, sometimes I'll wait until the histogram goes bright red. So what could happen at the moment? It's all right down, which means that's pretty a strong sign the market is falling. Is that if you get a sell signal and the MACD on the 3 minute has crossed over, but the histogram is not bright red, that circle is going to be dark red now. All right, it's going to be dark red. And as soon as the histogram goes to bright red, that color is going to change from a dark red to a bright red. So I cannot tell you the number of trades that I've taken with the change of color of the histogram. I mean, it's incredibly powerful. If we just, for example, turn the indicator off now, so we wouldn't have wanted to enter a trade there, okay, because obviously it's out of alignment. But if we turn this whole indicator off, let's just turn it off for a second on the 3 minute and just focus. If you just now focus just on the histogram, look, as it turned at the top, look what happened. The histogram, let me make it a little bigger. The 3 minute histogram went bright red. And from that moment, price just dropped. And so I look at the color of the histogram a lot on the 3 minute if I'm trading the 1 minute. And likewise, if I'm on the 3 minute, I'm looking at the 8 minute. And so likewise, if we were in a buy, so once this crosses over, okay, so there was a bullish crossover, then the MACD would have gone, that would have actually have gone dark green. If you can see, it may not be too clear on the zoom, but we've got a bullish crossover circle and the MACD is a dark red. But we always follow the histogram is the main thing. Sorry, the MACD crossover is the main thing. So that would have made a dark green circle showing there's been a crossover. But on the next candle, that went to bright green. That means that circle would have gone from dark green to bright green. And so it may take you a while to get your head around it. So the complicated part is this, you will get used to this, but I just feel it's too useful not to have. If you have sometimes, you will have a bearish crossover, and you may still have a bright green candle. In that case, we follow the logic of the MACD. We will then post a dark green circle. So a dark red circle. We're always going to follow the logic of the MACD. So I just want to summarize that again, because this is the change of the logic. So the MACD now has got four colors. There's dark red, dark green, bright green. When it goes to bright red or it goes to bright green, that is following the color of the histogram. And again, those are huge for re-entering trades. So when that color changes, I'm looking at the lights a lot, waiting for a good entry point. So I know there may be some questions coming. So Ty can maybe look at if there are any questions. But you'll get your head around it, and it'll makes it much easier seeing those bright colors. I mean, right now, we can see from the M1, M3, M5, M8, M15, all of those time zones, the MACD is bright red. That means there's been a bearish crossover, and every single MACD from the M1 to the M15 are all bright red. And that means price is that's what I like about this table. Look here, since all the price is just like falling off a cliff here, and that is showing us what's happening. The 21 also, look at the 21. The 21, all of those are bright red. That means everyone from the M1 all the way to M15, there's a good angle on the 21. So when you see that, that means price is probably going to continue to fall quite a way. The problem is not all the zones are aligned. We can see that we're still in between some of the zones on those high time frames, but that shows strong bearish momentum. So I trust that makes sense. And you've got the new upgrade. And again, you will see dark and bright circles on the MACD telling you just how strong the trend is. But I just feel that's going to be really good value for us as traders. All right, then the next thing I'm going to do is just look at the sort of best and safe entries. And this has really come out of, like, I think Selena asked a really good question. And then I gave like a paragraph, an answer in our chat. And then when I woke up in the morning, I thought, I just want to add one more thing. And then I think Louise that took that and made it into a great document that we're going to drop. Was it Louise?
Yeah.
Yep. So many thanks to Louise. I think she's on tonight. I don't see I'm just concentrating on my chart here. So thanks to Louise and Ty. We're just going to put that document in the feed at some point, but it really summarized basically what I look at in entering trades. So if, for example, let's have a look at some signals, because really the way I like to trade is I'm constantly looking at the relationship between the M1, the M3, and the M8. So that's why I like to have three screens open. You've heard my old saying, the 8 is your mate, because I mean, every candle is 8 minutes. I think every candle is giving 8 minutes worth of information. So that's huge for confirming trend. So, I mean, we've got the MACD table, but honestly, I hardly ever click out of and look at the 15 or the half an hour, the 1 hour. Look, it's super helpful. I do that sometimes, but most of the times, if the market is trending, I look no forward than the 8, because I just feel that gives such a good overall picture of where you're trading, especially if you're using, the 1 and the 3 to enter your trades. So I'm constantly looking at the relationship between the 1. Oops, my thing's just reloading as it does sometimes. I'm constantly looking at the 1. It's almost like a dance and finding the rhythm. When those three line up, price really moves. We can see now. I mean, we can see now how price has been dropping strongly. There was a pullback. And then the 8 minute, from 10 past 7, price has just been dropping and dropping. And so let's just I want to look at a few examples. Just firstly at getting into trades, how I look at it. And so then we will give you a document on the summary. So obviously for a lot of us, and for me too, I don't throw away pips. So if I get a signal on the M1, I mean, the rule is we look at the M3 for confirmation. We always want to look 3 times higher. I mean, that rule for me, that's one of the most essential parts of the strategy, because with every single indicator, no matter what strategy you're using, I mean, there's a lot of people that create a lot of stuff. The 1 minute, the strength is you can get in early and there's quick pips, the candles change quickly. But the weakness for the 1 minute is that you're never quite sure if the signal you get is the beginning of a new trend. And often it can pull back. And so that is the weakness with any 1 minute strategy, is that signals in the 1 minute often pull back and stop you out. And so we like to only enter 1 minute signals if a higher time frame is moving in that direction. And that then means that, the trend is being established and it's safe to enter. And so you can see, if you look at this signal over here, we thought we got a sell signal, price must be dropping. But then no, we look at a higher time frame and look what was happening. If we never would have taken that signal. If we took that signal over here, that would have been red, that would have been in red, but both on the M3, the main trading trend zone, and the MACD would have been green. So we can see we wouldn't take that signal because the 1 minute is miles away. We can see on that candle, we got all blue. So that's a no-no. And likewise, we can see our MACD, let me make it a bigger. The MACD was also, that candle, where was it? It was about, what we're looking at, let me get the right spot. So it was that candle over there. We can see we never would have taken that trade. Why? Because the 3 minute is still bullish. The main trading trend zone is still bullish. Plus the MACD is still blue, which means heading up. So that one would have been easy to ignore. So I'm comparing the 1 and 3 first, and we'll also look at the 3 and the 8. So now we get another signal. Do we take this one? Now here's a great example of how I would have traded this signal. If we looked at this signal, we can see we got a sell signal. That means, hold it, I want to interrupt now. You can see what's happened is on the M1, just quickly what I mean, can you see that circle now has gone dark red? That means because the histogram, which was bright red, has now changed to dark red. So we can see that signal, the circle has gone dark red. That means a pullback. And so that table's telling us good information that that's a pullback. It's unlikely that trend is starting in reverse. Just looking, still looks very bearish, but there was just an example now of that M1 circle on the MACD going dark red because the histogram has gone dark red. So once that crosses over, that's going to go to dark green. So we'll come back to that. All right, anyway, so now we're analyzing the signal. We said this one was a definite no-no because clearly the 3 minute is completely out of alignment or bullish on that candle. Then we get a second sell signal. Now, do we take this one? Now, the answer is No, because again, we can see that the 3 minute on that particular, let's just get the exact candle. We're on that candle over there. We can see that on our table, the M3, the MACD, and the trend zone would have been green. Plus, we're probably still in a slight uptrend. Our 21's pointing up. So we would have 3 green circles over there, which means we're not allowed to take that trade. That would be breaking the rules. But of course, we don't just then, walk away from the screen. We can see there's some good things about this signal. Yeah, we can see that the 233, we can see that has changed to red, meaning that's the 15-minute trend zone is in a downtrend. So now we're going to wait for an entry. And so we're going to then look. Now let's just pretend that the POC wasn't there. So we know that's going to pull back, because whenever this is not aligned, there's always, on the rule of probabilities, there's going to be a pullback. So we wait to find an entry point. So now we wait, and we can see now there is a pullback, price going sideways. I mean, that would have been a potential entry point right over there. Now we actually get a sell signal on the 3 minute, and it's a strong signal. And so that would have been a good entry point for your 1 minute, because now we can see it's crossing over. So if we're following at our table there, at that point, that would have gone, yes, that M3 would have gone from, let's just see, would have been gone from dark green to bright red on the MACD. Plus the trend zone would have crossed over on that candle too. So suddenly on the 3 minute, you would have seen a bright red, plus the trend zone would have gone red, and the 21, that was probably turning to, that would have also gone to, probably would have been a darker red. And so we're always looking on the 1 minute, we're trying to look at the dance of the 3 minute to see when can we enter, when is safe. Now we're just ignoring, for illustration purposes, just the POC. That could have been a bit of concern, but on this, we can see that it was a good signal on the 3 minute. It's bright red, meaning strong. We've had a triangle down, which means the previous pullback up's reversed. We also have a bearish crossover. Then we get the signal, histogram's bright red, already some separation on that second candle after it changed, that you're in a strong signal. So that is how I'm always looking. I'm looking always to look at the 3, and now the table makes it much easier because those colors are changing nicely to help us. And so let's just look, if we're looking at let's just take a random 3-minute signal here. So here, if you trade in the 3-minute, as you know, I love the 3-minute. I'm looking at the dance between now the 3-minute and the 8-minute. So here I've got a 3-minute signal. Wow, it says strong. But remember, if we're taking 3-minute signals, we also want to check on the M8 for
Dad, can you do me a
confirmation.
quick favor? Can you draw a
Yeah.
vertical line on that 3-minute chart when you're highlighting an entry, and then sync it so then it'll show
Okay.
up whatever time frame you're pressing? Because then you can, yeah, there we go. So as soon as you click that guy and then right click him and go,
And
right click on the line. I think you might have just clicked on the chart. There we go. Sync globally. Bang, then it'll show up on the 8-minute chart. There we
okay.
go. Now we know exactly which candle is which with the one you're looking at. You can drag it as you need to.
Now, I want to make a solid line though that looks easier, and it should be 1 point. That's great. Thanks, Ty.
Thanks. Perfect.
Okay, so brilliant. Was that your idea?
I'm
We
claiming
always
that one.
teach.
That's how I
Yeah,
monitor what's happening on what candles if if my
great.
cursor is, out of sync or
Oh
something.
my gosh. Man, I'm so stupid. Thank you. All right, so now we get a 3-minute signal. So remember, if we want to take 3-minute signals, we have to look 3 time frames higher, and that means we're looking at the 8s. I mean, look, in theory, 3 times 3 is 9. I know that, but 8 is a fib number, and they are greater predictors of price than anything else. So would we take this 3-minute signal? No, we wouldn't. Why? Because at that time, the 3-minute, let's just clear the screen a bit here. The 3-minute may have been red, but the 8-minute those two would have been green. We can see that has not crossed over. We still are bullish. And likewise, the MACD on that line also bullish. So we would have ignored that. But it does mean now the 3-minute is a strong signal. So remember, when the zones, exactly the same thing happens when the 3 doesn't align with the 1 for a 1-minute signal. The same thing happens when the 8 doesn't align with the 3 the same thing happens. You always get a pullback. And so we can see there's a 3 minute signal, but they're not aligning. In fact, this looks like the 21 would have been slightly up. So we would have had red, red, and possibly a dark green at that point anyway. So it would have warned you not to take it. So we got to wait for everything to come in alignment. So we can see we're still bullish, still bullish. That means pullback. And so as he priced the drop, look, it dropped a little bit. Let's just work out, okay, it dropped about 10 pips. But then we had the inevitable pullback. So again, I think I said this in one of our live market analysis sessions. When you see a signal and it doesn't, and it doesn't align, don't walk away. I'll always wait to find the best point to enter. And so I'm looking at the three. I'm looking for a good place to enter that trade. So I'm waiting. You can watch my cursors moving across. Now we almost aligned there, almost, maybe one candle later. The safest place actually could have just waited for the 8 minute signal. So that would have been the safest place to enter. And I'll talk about re-entering trades in a minute. There were reasons to enter over there. That made that okay. That I'm getting ahead of myself. I'm going to come back to that. But you could have just been patient, waited for the 8 minute signal, and that candle may have opened up there somewhere. And I mean, there was already 40 pips in that trade before the pullback, and that's because the 15 probably wasn't aligned. So I'm always looking at the relationship between all three. So I mean, Louise has made these great notes for us. So first we look for the M1, get a signal, and then we got to check to see if the M3 does confirm. Now, this is the thing where the 8 minute becomes very helpful. Let me just take this line off now. We'll let delete globally. Yep. Is that sometimes I'm trying to see if there's an example here. I'm not sure if you'll find one looking very quickly. This is almost, sorry, Ty, I need to sound a sync globally now. This is a good example. So let's go to our vertical line on that signal over there. Right click, sync globally, and let's just see where that line came up. Okay, this is almost a perfect example, but not quite. But we're gonna bend the rules slightly just so I can make a point here. So remember that sometimes you may get a signal on the 1 minute, but the 3 minutes not aligned. So if we look at that signal now, the 3 minutes not aligned because we both on that line we can see both the main trading trend zone and the MACD have not crossed over. But very often what happens is there's been a move, there's been a pullback. And so the 3 minute is not dancing with 1 minute. It's kind of out of sync and it's out of alignment. But if the pullback is not severe, often that trade is all systems go still on the 8 minute. So we can see here at that point, the 3 minutes not aligned. But if you look at the 8 minute, look at that. The 55 is definitely bearish. We can see our 21 on the 8 minute, that would have been green. The histogram, we're on the crossover point there. And let's just say that signal, that MACD crossover was just a bit early. We're just bending the rules slightly to make a point. So often, if I get a M1 signal, if the 3 minute is not aligned, but the 8 minute is, I tend to take those. The only thing you have to be careful of is if the 21 is pointing strongly up, then you're going to get a pullback. So here we can see there was a slight pullback, but not enough to stop you out. Why? Because the 8 minute is looking pretty bearish. And so again, I just want to make that point again, that if you get a 1 minute signal and the 3's not aligned, don't just say, okay, I'm going to chuck that out, go make a cup of coffee. Look at the 8. And if the 8 is aligned and the 3 is not, provided the 21's not pointed up, then I take those trades. So that was a bit of a pullback, but not severe because the 8 minute was looking pretty bearish at that point. So like this morning, I'll show what I did this morning. This morning, let's just go. So this morning, I took this buy here. I took this buy. There was a buy here on the Dow. I took this buy. I took this trade. So there were reasons to take. Okay, I want to do Ty's trick here. This is great.
On the Dow or the NAS?
Sorry, on the NAS. I took this one. Did I say Dow?
I think so. But anyway, you're on
Sorry,
it. That
Naz.
looks
I
like
took
one.
I took that signal. Now I knew, look, price was slow. It was very, very slow. It was a strong signal on the 3 minute. We can see it's on the crossover. We've had a triangle up. The histogram was bright red. And so everything on the 3 minute was voomp. The problem was let's go back to the 8 minute. Let me sync globally and sync globally. I'm liking this tire. So if we go back, what time was that? Uh, it's not syncing globally. Where's
It
my
says
line? Help.
Tuesday, 6th of May on your, but so look at the time,
I've
the
gone back too
timestamp
far.
too
Here we
far.
go.
Yeah.
Here we go. Here we go. So we can see on the 8 minute, it wasn't aligned. So the rule is if you get a signal on the 3 minute, you want to have 8 minute confirmation. Now we can see that is a bearish crossover. So strictly speaking, the rules, we wouldn't have taken that trade. But when I saw this, I thought this is looking good. Again, we got a bright green signal. We're on the crossover. The 55 had just gone bright green on that candle. I mean, the 233 is up on the crossover, triangle up. That was a strong signal. But the 8 minute wasn't completely aligned. So I knew, look, it is going to have a bit, you can see here, almost running parallel, end of a move. But when I looked at our trend table, all I saw here at that point was all green. So if we change this to the 15 minute, so 15 minute, let's see if this experiment works. There we go. That's, oopsie. Where's my MACD gone? Ah, Tahada. Sorry, that's gone to the top of the table. So this is what the 15 minute was looking like. So if we look at these two, because this is what the trend table was telling me, there was all green. We can see that was running beautifully parallel. There was still nice separation over there. And so I took that trade. This again, high time frames, bully lower time frames. So I mean, it did kind of chug along. It reached TP2 somewhere over there. So what I'm saying is be aware of the high time frames and don't necessarily disqualify trade just because 3 times high doesn't agree. Look to the high time frame. So for me, the 15 minute being all green, I mean, everything was green. The MACD, the trend zone, and the 21, all green. So I took that trade, and I think there was about 40 pips in that trade. So that is basically, the dance, looking constantly at the 1, 3, and 8. Let me just change this back to the 8s.
Couple questions whenever you're ready.
Yep.
Okay.
Fire away.
First off, Tim, how much weight do you place on the M5 then, as you never have it on the live chart, but on the table? Just nice to have extra confirmation, question mark.
Yes. So look, the M5's great. The M5's great. It's just not enough for me. It's too close to the M3, but I always leave it on. And the reason is because it's a very popular, for a lot of people, like let's say, I think Tyler agree, a lot of people don't trade on the 1 minute. They like the 5 minute, in other strategies. And so I'm looking at what's happening when the 5 minute goes all green, all red. People who trade in the 5 minute, they're all going to jump on and press buy and sell, all around the world when things cross over and align. I mean, they may have different EMAs and strategies, so not 100% accurate, but generally when the M5 lights up, that's a good sign that price is moving. So for me, I just leave it there as a great confirmation. I know Ty has it on his screen all the time. It's a great time frame. It just doesn't fit with how I trade, but I look at it all the time. So if I'm in an M3 trade that's chugging along and the M5 starts going bright red now and the 21 is bright red, that's a great sign that price is going to continue to fall and move. So I look at it quite a lot. It's a great confirmation to what's happening on the M3.
Yeah, and that's probably our subtle difference is that I'll have a 1 and a 3 always, and my third one will be a 5, sometimes an 8. And I've got some other charts that I might flick to that have not got any splits on that might just be a 5 or just be a 15 if I want to see it. But for me, I guess it all depends on what your trigger chart is. So for me, it's
Yeah,
almost always going to be a 1 minute chart that I'm
yeah,
executing from, as in I'm looking at what's happening on the 1 minute,
yeah,
and I'm then looking for confirmation on the three, maybe the five or eight. And
yeah.
so I just like to know what's going on those because I just pull so much information from them. So a lot of
Mhm.
people might, for instance, use the 5 or the 15 minutes as that three time frames higher. So it works well for that. It's just an option. It's honestly, it comes down to what your preference is over time from just learning
Mhm.
the dance. Like what Dad is talking about with
Yeah.
the dance right here and alignment essentially is knowing that, if one is not in alignment, expect a pullback. Most of Dad's trades have got alignment, and from clicking the button in and out is a very short amount of time because he
Mm.
waits for those really well aligned trades. Um, One more question down here from Zeph as well. Are you valuing the 8 minute MACD over what's happening on TZ on the chart? I don't know if I'm reading that correctly, but
Yeah, the
that's,
trend zone.
yeah. Are you valuing the 8 minute MACD over, so what's happening on the actual trends on the MACD itself over, I think Zeph, correct me if I'm wrong, maybe I'm not reading it or understanding you properly. Feel free to talk it out if that's easier. But essentially, we're kind of looking for both. I mean, there was a question earlier about trend zone alignment, basically understanding trend zone alignment versus zone alignment. So remember, I mean, Dad, you can explain this, but trend zone
Yeah,
is our zone. If you want the red
yep,
and blue highlighted zone next to the 21 moving average that Dad's highlighting there. So the
yep,
colored in zone on the price chart right there, that
yeah,
is our trend zone. And the same zone is in the MACD. You can
yeah.
see the same colored in zone on the MACD. So when we're saying trend zone or trend zone alignment, like the lights
Mm.
next to, like on our table,
Yeah.
we've got MD for MACD, and then we've got TZ. That TZ is trend zone.
Mm.
And if the trend zone is an alignment, like rule number one is trend zone alignment. So that's
Mm.
going to be the zones right there. Then the zone alignment, the final, that was we just had a traffic light for that initially, which communicates to us the trend
Yeah.
zones higher up. They're higher time frames.
Mm.
So, I mean, I typed it up, and Dad, you can adjust it however you would explain it.
Mm.
But basically, if it's green, we're going to be above all of the other moving averages that are higher time frames, like pink and teal, the 1 hour, the 4 hour. If we're above all of those, we're going to be green. And if we're below all of those, we're going to be red. So that's just
Mm.
telling us where those other zones are. So,
Mm.
Dad, I don't know if I'm explaining that as accurately as you'd like, but yeah.
I mean, we're talking about two things. We're talking about the zone alignment and
Yeah.
also about the trend zone.
Yeah. So there are two different things, but they're also, it's
Yeah.
basically the zone alignment is telling us what the higher time frame trend zones are doing. If that makes
Yeah.
sense. It'll start
Yeah. So,
to,
for example, with one glance, we can say with the 1 minute, we're below all the trend zones, but from the M3 up, orange, we're between them. That means trade with caution because you could be hitting different zones. But I
yeah.
mean, there was a good question is like you got to look at the balance between the main trading trend zone and the MACD trend zone. So, I mean, here's a good example. Look at that great separation. That means price is going to drop, but the MACD is like running parallel. Let me just make it a bit bigger. So, when I see that kind of separation, I think that trend zone, the main trading trend zone, probably does bully the MACD a little bit at times. But the ideal is to have them completely aligned. So over here, so if we go back over at this point, we can see there could be pullbacks. When it's running almost parallel, we can see it's they're going on and off the different crossovers. And that's why you can see it's a bit messy over there. And so that means it's probably going to fall, but that's telling us they're going to be pullbacks because they're running so close to each other, hardly any separation. The best is when you get separation on both. We can see the main trading trend zone is separated. We've got our bearish crossover circle, triangle down. Once you get to that point, then that's not gonna pull back. So we can see that because there's separation in both, they're matching, we can see price tends to drop quickly. And so I'll look at both. But again, when this is running almost horizontal, whether it's above or below zero, it means inevitably there are going to be some pullbacks. So I'm not sure if that answers that question, Zeph.
I'm sure he said something about when you took the 3 minute trade, I think earlier with what you were referencing, but
Yeah,
I think it's clicking. I mean, right there, like
yeah,
what the trend zone on the 1 minute's doing right now, it's wide, it's pushing up, we've got a counter trend signal, and how the MACD is mimicking that with a strong
yeah,
angle and it's widening.
yeah.
For me, I like to see that on the 1 minute chart, but for me, my best trades are when that's also the same shape on the higher time frames, like the
Yeah,
3 or the 5 or
totally.
the 8.
That's so
When
important.
almost all of the banger winners that I take, when I see that kind of angle and separation on the trend zones on both the MACD and on the main price where Dad's cursor is,
Yeah.
now, like over there where the counter trend signal is, when you see that same sort of pattern, that same sort of shape happening on those higher time frames, that's when it's got some oomph to it. But you can see
Yeah.
that 3 minute 21 is pointing down still. We're still got a red trend zone. So it's likely right now to get a pullback, extremely
Yeah.
likely to get a pullback.
Yeah.
And this is just a little counter trend move.
Hmm.
Another question from Dave, re-entering
Yep.
question. Often come to a trade late. The signal is 2 to 3 candles back because I have hesitated or even more,
Hmm.
and it has moved a lot in that time. The table is totally green or totally red. Is there anything to look for to join the trade, or should I stay out? Great question.
Yeah, and I tell you, I've learned, man, I've been burnt so much. That's why my strict rule is you never enter a trade without a signal. So let's look at an example. There was an example earlier. Let's look at this one. So here, so this is a good example. Okay, so we know it wasn't matched on the three, but let's just say this all matched up, and you missed the signal. Now, when price is kind of the trade hasn't really dropped yet, and prices are going a bit sideways, then it's not a late entry if price hasn't really dropped. And then if I missed the signal, I was nervous, and I'm looking to enter. I'm not going to press any button until I get a signal. So, for example, if I miss that signal, price is going sideways, I want to enter. Where am I going to enter? Now, you could have entered in a few places. So, for example,
There's
over
conservative
here,
and there's aggressive. So you can
yeah,
rank
yeah,
both because I can see both there.
yeah, yeah. So, you could have entered. This would be a valid signal because we can see the histogram has gone bright red. That means there's going to be some bearish momentum. And that's what's great now because on the table now, that would have been dark green, and now it would have been, sorry, dark red. Now it would have gone to bright red. So that could have been a potential entry point on that candle over there. But if you missed that, there we got another dark red, bright red. That could have been a potential point. So I'm ignoring the 3 minute. But then a safer place would have been there's triangle down. That would have been a really good entry. Was we got triangle down, we got separation in the MACD, and also the histogram is bright red. And that's, by the way, one of the reasons why I changed the logic here is sometimes you get the histogram bar going bright red, but it's hidden behind a triangle. And now you won't miss any of those signals. But I'll tell you where I never would take a trade is, for example, that candle. Like you can see, it's going down, everything's probably red, but there's no signal. And you have no idea when that's going to pull back. And so if price, where you're going to put your stop loss, you may need a bigger stop loss. You have to put it somewhere in this the bearish trading trend zone. But that's very dangerous. So I never enter trades ever on just a random candle where there's no signal. Never ever. I've learned that. I mean, that's when I told her the biggest loss I made this year is that I broke my rules. I mean, that was a few months ago. It was the opposite. Everything was green. Everything was bullish. It was 20 pips away from big round number. Everything, we didn't have the table, but everything would have been bright green. And as I clicked buy, I'd already made a nice trade. I thought I'm going to grab another 20 before I walk the dog. This big doji came, and I didn't even have time to put a stop loss in. And it took me a week. A week's earnings went in breaking the rules. So I'm ashamed to say that, but that's made me even straight. It's the last time I did that. So never enter a trade where just a random candle, even though, I mean, that could drop 300 pips, but it could reverse 50 before you know it. So always looking for, and that was what I was going to end with, is how you re-enter trades. Remember, we've got a few things to re-enter. I've already kind of covered them already. You've got a triangle down. You can enter a trade. We've got histogram going bright red. Also, we can enter, for example, here's a good re-entry point. Look at that's a good place to re-enter. There's a big pullback. You want to get into the move. What candle are you going to choose? This is the great candle. Let me just put the horizontal line there. So I'm learning from Ty. That would have been a great place to enter. But look what's happening.
Please sync up that line because you'll see what was happening on the other ones too then.
Okay, so sync globally. Okay, so we've got a triangle. That's not the best there, but I mean it's very bearish. But if we just look at the 1 minute, that would have been there was just a little burp there, but it was all bright red. But if we just look at the 1 minute, we can see there's three things happening on that one candle. That's what I like about this indicator. We've got a triangle down. Histogram was bright red. It is hidden behind the triangle down, but the M1 MACD would have been bright red there. Plus, you got a crossover circle at the same time. So prior to that candle, we can see that the 1 minute, the MACD would have been actually dark green. And what else? So that would have been dark green. Yeah, that would have changed on that candle. So that's how I re-enter trades are always looking for signals. So I never just randomly jump in like, I mean, that went bright red. It looks like, wow, I'm going to jump in on that candle. But look, it's pulled around and went the other way pretty soon after that. You would have hardly made any pips. In fact, if you entered on that candle, you wouldn't have known because you wouldn't have seen much divergence down in the indicator. Let's just move this line across. If we look, there's a nice bright green. Look at that. Let's actually push it there. At that point, you're going to, everything, look, bright red candle, prices dropping. I'm going to jump in, and there's nothing telling you there. Look, that is bright red. There's great separation in the trend zone of the MACD. But look, that thing, there was a big pullback there of like 25 pips. That just shows you never know what the next candle's going to do. And so with TrendForce, with our community, we want to encourage you not to take wild risks. Look always for signals.
Yeah, and everything about that candle as well, Dad, like the further you away, think of those trend zones. I mean, call them whatever you want.
Oh, that's another good point.
Whether
Yep.
it's a blue
Yep.
river that you're dipping your toes back into, or if it's a red cloud that you're tapping and rejecting, the further away from that zone you are, the more likely
important.
you are to hit a pullback very soon.
Yeah.
And so that's why, Dad, if you go further up, coming
Yeah,
back to
that
what you
was
were
a
just
good.
yeah, I mean the candle that you just spoke about like before entering on, like even if that white triangle up and down on the 3 minute happened, you got to remember that if you look closely at the time signatures of that 1 minute versus the three, you've got 8:11 right there, and that 3 minute candle I think was 8:09. So that triangle up was happening because of that recent 1 minute, that candle's coming back into the trend zone. And then the rejection happened on that 1 minute candle. And then on the very next candle, we got our triangle down again. So good to note. But essentially, yeah, if you're tapping a zone, like if price pulls back into the zone and it's a strong move, like right there, we've got our doji pattern just before that 1 minute vertical line. You've got the
Yep,
bullish
there's a good
candle up.
pattern over there.
It rejects the 21. So it taps the 21 in that zone, gives us the doji, gives us the bearish rejection candle, bang. Like that in itself is a way to enter. So I'm answering Mark's question simultaneously. Do you also react to the doji pattern? That is something to look out for. You never want to be entering on a doji in the wrong direction. Like if you were thinking that's going to now turn into a buy and you click buy as a doji shows up, that's a reversal candle basically. So, and another thing to think about too is the longer a move has been going, the closer you are to the end. In a sense that the closer you enter a move to the beginning of a move, the more likely it might continue. But the further a move has gone, the more risky it becomes to join it, if that makes sense. Yeah, because no moves go forever, and so if you're jumping into a shift and a move earlier, with confirmations, it's more likely you're going to hit a target than re-entering, way down past whatever the target was. So just something to be thinking about. I'm just catching up some questions here. If you want to say anything else, Dad.
Sure, no, that's very important. The further away you're from the trend zone, the bigger it's always going to pull back into that zone.
Yeah, there we go. Zev said, so essentially catch the bus from the trend zone rather than back to it. There you go. Yeah, man, that's a good one.
I like that, Zef.
Yeah, and that's the thing. And you're going to notice that kind of price action across all sorts of time frames. Like when price, there's something very powerful when we say rejecting a line. When price rejects a line, it has come back, it's pulled back, it's touched something and rejected it. That's actually giving us quite a lot of information. And you'll on like when a move has moved a lot, when price has moved a lot and it's pulled quite far away from the 233, I want to see price potentially, like you'll get a counter trend signal maybe to the 233, and you probably shouldn't aim further than that in a strong move. But if price then rejects that 233, you might often see like 2 or 3 rejections of the 233 after you've rejected something stronger like that. That's also then a place to look for a clear signal afterwards, because price has, gotten some energy back. Like it can't, you can't just have sellers only forever. Like there's going to be some buyers that jump in. Hope that's making sense, team. Can you somehow figure out
Look,
the end of a
I
move?
said
Oh, you
I
go.
said it at our last live analysis. I'm experimenting dropping the labels off the pivots. So, the colors are green for daily, orange weekly, red monthly. The purple is a quarterly down there, but I find it's very easy to read a chart like this. It looks so clean now. If you look at this 1 minute chart, it's got almost all the information we've had, but way cleaner without the labels and the lines.
Yeah, very cool. I mean, everyone, you can personalize and have as little as much as you want, but just remember that those lines do mean something and they're worth having. So, another good question from Mark. Can you somehow figure out the end of a move? That is the crystal ball question. And I think this is where, essentially reversal traders try to enter at the reversal. In our case, we're looking to exit for the most amount of pips. And I mean, if anything, if you're in a trade already, you just want to be moving that stop loss, locking in gains. But picking the end is a very, very hard game that you've got to understand divergence very, very well. And that reminds me of another question I've got to answer in a second. But really, it is a very tricky thing to get right. And that's why a lot of people that trade divergence and reversals get wrecked, because you don't have clear confirmations. Like I'm talking about people that use the reversal as an entry, and we're talking about the reversal as our exit. And so, maybe big round numbers or key levels, like I've talked about, like if you're marking out those key levels from previous sessions, like London or New York or whatever, and price has just tapped into those key levels, or it's just tapped a very high time frame, like teal, a 4-hour trend zone, and there's some divergence, it's very likely you'll get reversals from those levels. And so it's not a great idea to hold your trades longer than that. Like thinking this is going to just blast through these key levels, unlikely, probably going to bounce, because that's where there's a lot of stop losses and a lot of money hanging out. But that's a whole nother conversation. But coming back to Tim's question, he said something about wondering if the larger histogram bars count for anything, like momentum still growing. So the histogram bars essentially, just the size of those bars actually just represent the size of the trend zone. So if you look really closely, like this is how a standard MACD is made. That gap that you can see Dad highlighting right now on the MACD trend zone, the blue zone, right? The widening blue zone is also represented in the size or the height of those histogram bars. And you can see, look, as it goes from red to green on the histogram, Dad, to the right.
Yeah.
Not the left, right there. You can see that the trend zone pinches a little bit in the blue trend zone onto the right, just to the right. No, the trend zone right as the histogram bars go from red to green.
From red.
You see, as we go from red to green, that green bar was slightly higher just after the trend zone pinched. So those histogram bars actually just represent the same size gap on the actual trend zone on a MACD. First time I figured that out, my mind was slightly blown, because I was able to understand what the heck I was reading. But there's like 16 different ways to read divergence of a MACD, and that is not what we're teaching tonight, but it is very powerful once you start to learn the different nuances of it for understanding those reversals. Hope that's helpful. Just checking in on other questions. Okay, cool. This has been really helpful. Great. Thanks, Shay. Appreciate that, bro. That's that's awesome. It's landing. So plenty more we could share with this kind of stuff, guys. But we are at 9 o'clock. So Dad, if you got any final thoughts, otherwise we can wrap her up there.
And you want to talk about Friday's time?
We thought, with what's been happening markets-wise right now, why not? The moves seem to be recently happening a little after 7 a.m. And I mean, that's when, all go with kids and us young parents. But we thought instead of starting at 5 a.m. and running to 6:30, we might try and push closer to 7. So maybe starting at 5:30 and running as close to 7 as we can to capture a bit more of that Zoom. I mean, look, odds are we'll be up at 5 anyway and still ready to rock and roll. But we might start the Zoom at 5:30 and roll from there. Otherwise, yeah, I can see that. I think we're scratching where it itches. But yeah, guys, we'll take those awesome notes from Louise as well, and we're gonna fiddle with and type
I'll
them up.
stop
And
share. Back to you, Ty.
okay, cool. Let me suss out. Where's my camera is on. Let me pin myself as well, and then I can jump on here with you. There we go. Yeah, guys. So we will take what we've been talking through, and what Louise used ChatGPT to type out. We're basically talking about the process of entering and re-entering and what to look for in that case. And once these things click, things become a whole lot more fun. And so right now you're looking at a whole lot of different things like triangles and triangles up and circles down and all the different things to re-enter, or enough information to enter just after the one signal if you're waiting for a higher time frame trend zone to come into alignment. But once you start to see how this beautiful tool works in more clarity, it'll really line up. So another thing we're thinking of doing was, we'll see how we go over this next week, but next Tuesday, we might actually then run a really nice, concise walkthrough of exactly how TrendForce functions again. Now that Dan and I were chatting today, that we really feel like what we have here is concrete. Version 1 we had for a few months, version 2 we had for a few months, we're a week into version 3. We can't see anything else changing in a major way right now. So we will do a nice, succinct overview of everything, what the moving averages are, what the key things are for, we've got less bells and whistles now, which is great, but still some nuances there. And so next week, Tuesday, might even be an opportunity to invite a friend or two on. I might even start posting some things in the Facebook group, refresh all our branding. And so if I end up doing that, feel free to invite anyone along, because we'll make it really friendly, and honestly, for all of us, every time you hear these things fresh from the beginning as such, you'll start to see how trend zone alignment works, how the MACD alignment starts to happen, and then obviously the angle of the 21 and zone alignment, etc. And as all of these key factors start to sync up in your mind, it becomes second nature, and you can just look and go yes, or look and go no. So that's our plan for now, guys. So Friday morning, 5:30, and look out between now and then for some cool brand refresh things dropping soon. And next week, Tuesday, might be at this moment in time aiming for one of those fresh opportunity to show everyone from start to finish how TrendForce functions. And at the same time, if you guys have got questions, or if you would like something specific for us to cover on a Tuesday night, send us some messages, let us know. We can do deep dives on divergence. We can do deep dives on anything. So hope that was helpful, team. Thanks so much for tuning in live, or for watching this recording. Lots of love to all of you. Dad, thanks again so much for being on with us and dropping so much value.
And thanks to Richard and Louise for their contribution towards making our trading better.
Yeah, really appreciate that, guys. I just love it that each and every one of you get to add value and perspective, and that gets to be put into the code within a day or two and have things updated and upgraded. So with that, we'll leave it there. Enjoy the rest of the evening. Trade safe. We'll see you soon. All right. Much love, everyone.